All right. Hello, everybody. Thank you so much for taking the time to jump on this webinar and learn all about SETC and ERC. We are going to get fully started in just 1 minute. I just want to make sure that this is in all of the groups that it needs to be in. So hang tight with me for just 1 second while I jump on Facebook and make sure it's doing exactly what it's supposed to be doing. There's usually a little bit of lag time. So let's see. Oh, we are live here. Let me get me in the group where we need to be. I hope you guys are all having a fantastic Saturday. It's kind of dreary here in Michigan today. Not sure why. Weather. I think we're getting ready to get a huge snowstorm. All right, we are live in all of the groups we need to be live in, so let's get started. Now, my friend Susan was going to come on this morning and talk to us about the self-employed tax credit. However, life kind of got in the way. So I'm going to go ahead and use her slides, and I will present for you. Here we go. All right, so first, what is self-employed tax credit and who is able to get this credit? This is up to $32,000 in self-employed tax credits that you've already paid. There are over 80 million people that filed self-employment taxes just last year. Let's see, who's eligible? If you are a network marketer, if you drive for Lyft, Uber, hairdressers that get 1099s, sole proprietors. So all of my in-home childcare provider friends, you guys are all eligible for this up to $32,000 in tax credits. So if you paid self-employment taxes, you are most likely eligible for this. It's for April 2020 until September of 2021. It's made possible by the Family Medical Leave Act of 1993 and the American Rescue Plan Act of 2021. This is a fully refundable tax credit. It is not a loan, and there is up to $32,000 per self-employed person available. So this is a breakdown of how it works. You can get personal sick leave, which is up to 10 days at $511 per day. You can also receive a family leave tax credit. That is up to $200 per day for 10 days if you were a caretaker. Now, if your children were not in school or their childcare was closed, you can receive up to $200 per day for 50 days in 2020 and 60 days in 2021. All you need for that, you can easily call the school and get them to give a letter of the dates that they were closed, and your child care provider can do the same thing for you. So this is a very simple process for self-employed individuals. You simply grab the link from the person that invited you to watch this and fill out a basic questionnaire. There are no upfront deposits. You provide Jorns and Associates with your 2019, 2020, and 2021 tax returns, so that way they can calculate the amount of credit that you are able to receive. It will send you your quote, and then you do pay your filing fee. Easy peasy. I accidentally removed myself. All right, so if you have questions about SETC, please go ahead and type them wherever you are seeing this recording. Right now, I'm going to go ahead and bring my friend Danny on stage so that way he can explain a little bit more about the Employee Retention Credit, or ERC. Hi, Danny. Thank you so much for joining me today.
Hi, how are you?
Absolutely fantastic. So can you explain a little bit more about this ERC, how it works and who's eligible for it for everybody that's watching, please?
Sure, and it's very simple. I think a lot of folks have heard, or they've seen some videos or commercials, or you got calls or emails, whatever, about the Employee Retention Credit. Well, just to make it very simple, and I'm a very simple guy, what I like to do is bring it down to where anybody can understand it. So let me just explain what this is. If you were a company that had W-2 employees that kept your employees employed during COVID, 2020 and 2021, I like to say you did the right thing. Not that if you didn't keep them employed, you did the wrong thing, but you kept those people employed. So you paid the taxes, you paid their income, all that stuff. The government is going to reward you for doing that. They're going to actually give you up to $26,000 per employee back because of you keeping them employed during COVID. So it's very simple. I don't know all the tax codes. I'm not a tax attorney. I'm not a tax accountant, but I can tell you this. Any company that kept those people employed can get up to $26,000 per employee, and it takes a lot of work to do that. The company that we work with, Jorns and Associates, has actually helped over almost 20,000 companies get up to $10 billion back from the U.S. government. So it's very simple. The person that invited you to this, just ask them if you know a company with W-2 employees, or you are the owner of a company with W-2 employees, up to 500 employees. It doesn't matter how few that you have, but yourself and family members do not count. So you can't count family members or yourself in those W-2 employees. And it's okay if they're part-time. They just kind of put them together and make them full-time employees with all the part-time employees they have. But you basically take the link, you fill it out. Jorns and Associate will reach out to you after you fill out the questionnaire. It's very simple to do. And whoever does your bookkeeping or accounting, or if you do it as a small business, or companies that do it themselves, they actually will reach out to them and they'll ask for some papers. They'll ask for some documents. They'll ask for tax papers, all that stuff. And you'll upload them to a link, and then give Jorns and Associates a few weeks to figure out what you can qualify for. Now they charge 20%, but there's percent when you get paid from the Treasury. So it could take 6 months, 9 months, 12 months for bigger ones. But I want you to think about this. If you know somebody with a company that has 10, 20, 30, 40, 50 employees, I think of them as they are the grassroots of this country. And what I mean by that is they may have started their business a handful of years ago, 10 years ago, 20 years ago, and they're still with 10, 20 employees. They're still just grinding it out, trying to make it work, keeping their employees employed. And if they got up to $400,000 for 20 employees or $500,000, would that help those people? Yes. And again, we're not selling anything. We're helping these folks get this money back that they've already paid. So get back with the person that invited you on here. Ask them for the ERC link, and you can fill that out. It's very, very simple. And if you know people, you can share that with them as well. So again, when it comes to paying for it, when the IRS or the Treasury sends the company the money, Jorns and Associate will send an invoice for 20% of that the money that they get back. So I appreciate you guys. It's very simple. You can watch a video in that link. Super, super easy. There's a 5-minute video that explains it to you. So I will send this back to you. Thank you,
All
Brene.
right, wonderful. Thank you so much, Danny, for coming on and helping me to explain this to everybody. The process is very easy. With both, you get your own case manager that helps you through the entire process. It's one person that you communicate with. You can email them directly, get answers to all of your questions. For now, let's get you started on this process. Super easy. If I invited you to watch this webinar, just go ahead and tag me in this and say, Brene, give me your link. And also, let's help more people know about this. We want everyone that is qualified for the self-employed tax credit and the employee retention credit to get the money that they are owed. It's very easy to do this and help us spread the word. Do me a favor and type @ and highlight in the comments wherever you are seeing this. And if you know somebody that is an employer with more than 5 W-2 employees that they had during COVID, even if they got a PPP loan, doesn't matter. Tag them in this video or share it with them. All right. I hope you all have a wonderful Saturday, and I'll chat soon. Bye.